All right, hello traders. Jeff with OptionBoxer.com again with another video. Today is going to be a little different. I kind of started maybe a week or two ago. I kind of started to do some daily trade analysis videos and became quickly bored of them. I don't think there's enough new content in the way that I trade for those to be, I won't say, they may be enlightening at times, but they're definitely not entertaining, and they get very repetitive and monotonous. And so I'm going to stop doing them. Um, the three or four that I've done will stay on the website, so you're welcome to view them if you kind of want to get an idea of, how I go about scanning for and looking for potential trade opportunities. But rather than do the daily trade analysis, I thought it might be beneficial, not only to myself, but to those that may see these videos, to discuss my thought process and to kind of look at the different option strategies. There are many option strategies. I don't necessarily employ all of them. Some of them I'm probably not even familiar with, but of the ones that I am familiar with, I have done a fair amount of research on, and I've traded most every one of them. In fact, I have traded every one of them, which is why I've done research on them to begin with. But with that knowledge, I feel like it may help someone else out there that's just getting their start trading options. And it may show somebody that already has some experience with options, just kind of another trader's mentality around the different strategies. I will say this before I begin, and let me grab the book here. The book that really got me started with options trading. Well, I shouldn't say it got me started with options trading. The book that taught me about most strategies is known as Options as a Strategic Investment by Lawrence G. McMillan. Now, when you get this thing, it's going to appear quite daunting because it looks like an encyclopedia, and indeed it is, more or less an encyclopedia for option strategies, but it's very detailed in its discussion and what it is the trader hopes to have happen with each different strategy. So it's an incredible book, and to be honest with you, now that I pick it up again, I'm disappointed that I haven't referred back to it in as long as I have. So I probably will here soon enough. But kind of with that out of the way, I want to be clear, this video is not a recommendation for you to buy or sell any security. I am not a financial advisor. You should always do your own research. Trading is risky and you can lose money. All right, that's out of the way, and I will probably say that every single time I make a video, but it's a necessary evil into today's world. I just want to make sure everybody understands that that I'm not telling you how to trade. You've got to do your own research, and you've got to come up with your own game plan or trading plan, as it were, and figure out what fits you best and what fits your financial picture the best. But that being said, I want to go ahead and take a look and kind of start introducing my website a little bit more. Now, I may not be the best writer, or I may not be the best teacher of this information, but I do have a lot of knowledge because I've spent a lot of time researching it, studying it, reading about it, back testing it, you name it. I've tried it, paper traded it, and so I do have a wealth of knowledge. God has graced me with the gift of curiosity, I guess, and so I just never really can get enough. I mean, I'm not a big TV watcher, so instead of watching TV, I usually hop on YouTube, or I'll read articles about trading, just to get another perspective on, I may look at a chart and see one thing, but somebody else may look at a chart and see something completely different, which is kind of why I'm mesmerized by the markets and options in general. But I just like to see different perspectives, and I think it offers traders that are looking to grow and to develop, it only builds that tool belt, I guess. I don't know, it only makes you better, in my opinion. And so I just keep reading about it, and I keep studying it, and so far it's been fairly effective. That's not to say that I win every trade. I definitely do not. In fact, this year on the year, I think I'm down at the moment, and that's just the way trading goes. But that's okay. I still enjoy it. I always trade small so that I can continue to trade. That quote goes, or that particular piece of logic goes to Tasty Trade. They have a saying that says trade small, trade often, and that has served me well for sure. And I hope maybe it'll serve you well, but I can't take credit for it. Like I said, it came from tastytrade.com. So what I want to do in this video series, now that I've rambled for 5 minutes, is I want to just go ahead and get into some of the strategies that you'll see here on the main menu. And I'm going to start with number 1, and we'll work our way through the bullish strategies, then we'll go on to bearish, and then of course neutral, and we'll talk about the different strategies, and I can, kind of regale you with my thoughts of each strategy and what I look for. So that being said, we'll click on the long call strategy, and you can see I've got a write-up here with some pictures, kind of depicting the pros and the cons, and talking about the Greeks and so forth and so on. I try to be very thorough in my description. You can see it's getting quite long here, and then of course I've got the disclaimer at the bottom, but I try to be as thorough as possible, so I encourage you to read through that. Hopefully you'll find maybe a tidbit or a nugget of wisdom in there that you may not have already known about. But that being said, this is the long call, so for the sake of time, I'll try to be very brief. Of course, now I'm stuttering, but for the sake of time, I'll try to be brief in my description. And I'm looking here at Nike for no particular reason. Right now, you can see they're about to Nike is about to head into earnings, and they will have earnings here coming up in just 8 days. So volatility should continue to increase. Typically into earnings, volatility increases, so that right there would be a pro for the long call option, because what you don't want, sorry, I keep going to the monitor tab. What you don't want to have happen, you can see volatility here next week when they are announcing earnings is at 39. So I would expect that to continue to increase, even if only minimally. That's fine, so long as it doesn't decrease. Right now, option premium is a little bit inflated with the higher volatility levels, which we can see here on our IV rank. And if IV is going to continue to increase, these premiums will remain inflated. So then you're basically you're just worried about the share price moving higher. I do honestly feel like, given the market environment that we're in with Trump as the president and all the tax cuts, I feel like these companies, a lot of them across the board, are just, if they're good, if they were good companies before Trump, they're better companies now that Trump has cut them a bunch of tax breaks. That's just my opinion, of course. But I really think this bull market can continue solely because now these good companies are making even more money. Their bottom lines are only growing even further because they're saving so many millions and possibly even billions in taxes. Regardless, I do think Nike is obviously here in a bullish trend. And if I were analyzing this, if you watched any of my trade analysis videos, you'll know that the first thing I'm noticing is this thing is in overbought territory, and it has pulled back. And we do have a crossover of the MACD. The momentum index looks like it's showing a little bit of divergence. So is the MACD, even if only slightly. So by all accounts, this would look like a decent play to the downside. Now, what you've got to be aware of is, and now we're moving out of our discussion kind of on the long call, which I will get back to briefly, but we're moving out of our discussion on the long call into more of a discussion of technical analysis, but I hope it'll help you. And what you need to see here, or what I see when I look at this particular chart, is even if you go out here to the 20-year chart, I look at price has moved from 35 to 75 over the past 5 years. So it's more than doubled at this point in 5 years. And more specifically, price has moved from 50 to 75 in less than a year. So in the past year, price has, the majority of that increase in the last 5 years has come in the past year. So this is a strong bullish uptrend, and there hasn't been a lot of, there was kind of some choppy range bound action here as price kind of consolidated and I guess became accustomed to being at this higher level before again breaking out and continuing its move higher. So I think the move higher is definitely sustainable, but I guess what I'm trying to say is here in this short term, we may get a little bit of a pullback. And if I draw a trend line, I don't think you could get away with drawing it that way. It would probably have to be drawn in this manner here. So it's very realistic to think you might get a pullback into this range, and as it turns out, this blue line is almost right in line with the 50 period moving average. So it would not be unreasonable to suspect that that's a possibility. But we've got to plan. When you're doing technical analysis, you almost need to think about things as if you need to play two storylines out. You need to think about it as if the price will come down to this level and how you might trade it, or you need to think about if price fails somewhere up here and continues its bullish move upwards, how you may play that. Now for a long call, so like I said, that was kind of more of a brief divergence off of, for lack of no pun intended, I guess. But that was kind of a break from the discussion of a long call to kind of go into some technical analysis. Let me remove this drawing. But if I were looking at this, which obviously I am, if I were thinking about trading Nike right now, I'd probably be waiting to see what happens with the indicators if there is a little bit of a pullback. If there's not a pullback and price jumps back up here and maybe possibly breaches this 75.91 area, I would say the bull is still strong. But what I would really love to see and what would make me confident to get into this is if price did pull back into this 30 period EMA, or even better into this 50 period SMA, and then continued its bullish move higher. That would give you a nice entry opportunity if you were buying the shares, even better opportunity if you're buying the option. So that brings me to my next point. When you are trading a long call option, and I cannot understate this, first off, you need to check out volatility, which we already did. You need to make sure that volatility isn't declining, or that you have to make a decision. Do you think it will decline in the near term, or do you think it will continue to stay at whatever level it's at? Because really and truly, all you need it to do, so that it doesn't impact you negatively, is you need it to stay where it is the day you open the trade. Obviously, it would help you if volatility increases as you're in the trade. That would only further inflate premiums and potentially get you more bang for your buck. But regardless, the only thing, it can go up or it can stay flat. But what you don't want to have happen is you don't want it to decline. And right now, I think with earnings coming up, I think it will continue to stay a little bit higher. You can see here on the last earnings date, this yellow number right here highlights the earnings date there, and you can see it got up to 93. Today, currently, we are at, I apologize, I could have just looked right there. Today, we are at 67. So if that happens, premiums may go from, this is just a hypothetical guess, I haven't plugged this into any Black-Scholes calculator, but price may go from 226 to maybe 246 if it does in fact go to 93 or whatever that number was. And if that's the case, you may make enough money just on the volatility increase and the inflated premiums that even if you don't get the move that you wanted in the stock, even if it stays flat here, you may still be able to make some money. But generally speaking, if you're going to buy a long call, you're wanting these shares to go up. So that is what brings me to probably the most important point I want to make in this video, and that's when you're trading options, specifically long calls and long puts, you need that price to move in your favor now. You need it to move next to immediately, because as we all know, options will expire. So 30 days, that's a tough one to make for a long call. I mean, I would almost go more than 60 days just to give you a little bit of chance that this thing will move in your money, because so often, so often, price will do this to you. It'll look like it's ready to break out, like on this candle here, and then it just gets into this choppy movement, and it'll come back and forth, back and forth, back and forth for months on end before finally continuing the bullish move. And price will never move far enough for you to make any real money. You may go up by $5, $10, but your profit target may be 25 or maybe 50. Okay, and so very often when you're trading long calls and long puts, price just doesn't move enough for you to make the money that you're expecting, or it chops around like this for months on end until eventually the premium just wastes away. And that's something you have to be careful of when you're trading long calls and long puts. But take heart, have faith, because there is something you can do to kind of put the odds a little, or to increase your probabilities of success. And the way I go about doing it, I'm sure there's many ways to do it, but the way I go about doing it is I get away from the daily chart. I use the daily chart to kind of identify if that's what, if I think over the next month or so that I think price will improve to X level higher. So I look at the daily chart to identify if I think price will continue to move higher. But I start to do technical analysis on the 5-minute or possibly even the 1-minute chart to determine if I think this thing will move in my favor immediately. So I'm looking basically for a setup is what you're looking for on the 1-minute chart. You're looking for an entry opportunity. So when I look, if you watch the trade analysis videos, my technical analysis is fairly similar every time. So basically I'm looking for RSI to have dipped below here and be a little bit oversold. I'm looking for an uptrend, which I have. I also have a pullback into this uptrend right there, which you could make the argument. You could also make the argument that this uptrend, this pullback may have a little bit further to go to touch that line. But regardless, I think you're in an area where this thing could start to pop back higher. Of course, we'll need to see what happens, but we didn't quite get the dip into oversold territory here, but we have a crossover happening on the MACD, and I think looks like momentum has pulled upwards, but it doesn't look like much of a divergence. In fact, I see no divergence on either the MACD or the momentum index. So at this point, it would kind of be kind of the way I would go about trading this is I would say, let's wait and see what happens at the open. See what happens with price. If it continues lower, maybe it breaches this kind of the support zone here where price looks like it came down to, failed higher, failed again higher, failed again higher, and of course went back to a bullish move. So at this point, I'm saying if I was trading Nike, let's wait and see what happens at the open. If price starts, early in the session to start trending higher, then I say, okay, we've made our determination on the daily chart. We think this thing will move higher over the next month or so. And now we've looked at the minute chart. We think it's got to pull back into a support zone, into a trend line. And, of course, it would have been nice if some of the other technicals indicators would have agreed with our setup. But I think this is a decent play. If I wanted to put some money in on a long call, I think this would be a potentially profitable one. Of course, with long calls, as I've said, I think many times, I just want to make sure I hammer it home. They are wasting assets, and you don't have anything, like if you, well, I'm sorry, I won't say what I was going to say. I'll save the other strategies for another video. But you don't have any help on maybe a short call side. You may, if you sold a vertical, you won't have any help to kind of offset the losses. Of course, your losses are limited to what you paid for. So if I bought the 80 strike call here for 94 cents, the most I could lose would be 94 cents. And my profit target, here I can show you here, analyze the trade. Sorry, that was another strategy I was looking at. Let's go ahead and set these slices to break even. Make sure my date's right, August 17th. It is not. I like to set it for the day just after expiration. Make sure all the premium is out of there. So you can see right now, this position has a 77% chance of being a loser. Of course, that's just mathematical probabilities. And as we know, the market is not theory, it is the real world. So mathematical probabilities, while effective, and while, you know, if you extrapolate it out to infinity, you know, this 77% may hold true. But anything can happen, and this price could easily move higher. You could see right here, the max loss is in this blue number, or this blue line. The pink line or the purple line here indicates prices as of 6-20, which is today. So this will be 6-21 tomorrow, and you can see how price may shift just a bit. In fact, right here, if you'll notice that little brown hash mark there, you'll notice if I shift it back, the red line moves back over top of it. That's just indicating the brown line is where price is, and the red line is where I've got to be to start making any money. So you'll see we'll start tomorrow down by $2 or so, and that's just a part of trading. But we wouldn't enter this overnight. You'd be able to get in the morning, and so really and truly you wouldn't go down $2 to start with. It's just because this is after hours, and the time change hasn't happened yet, and the market hasn't accounted for, you know, maybe the 50 cents worth of theta decay on this trade. So I think that that about covers it. You can play here in Thinkorswim. You can play with some of the different, like what happens if stock price goes to X, Y, or Z, or you can see what the volatility, if you know, since we actually think over the life of this thing volatility may increase by 20%, we can take a look there. And let's go to, my apologies, let's go to expiration in August. Let's go to the week of expiration. We can see if price stayed exactly the same, and only volatility increased, you can see we would have lost $78. So we paid 94, but because volatility increased, we really only lost 80, let's say. So that volatility increase of 20%, you know, kept us from losing 14 cents as you know, all the way at the week before, or the week of expiration. So so volatility can help you. It can also hurt you if it was to decline. We can look back at this here. I'll show you exactly what I mean by volatility hurting you. So today's June the 20th. So let's say volatility went down by 20%. Something's not right. My days are messed up. So this is to break even. 1 second. Well, that right there shows you the power of volatility. I wasn't missing anything, and in fact, if volatility did decline by 20%, this call option would be worth absolutely nothing. So looking back here, we were trading the 80 strike call. If volatility shrank, and now this, you know, maybe my oh, I think I know what I did. So 20% is actually taking the volatility right here, this 24%, and shrinking it down to 4%. So what I was actually trying to do is look for if volatility shrank 20% from this number. So you'd have to find 67%, how that relates to 24%, 24 divided by 67 or something, to get that percentage, to understand what percentage of 67 is 24. And I'm not doing all that math at this point, and I may have even said it wrong, so I don't really know. But you can kind of gut feel this thing. You can say, well, if 67 is high, and it could go to 93, you would think if it does decline by 20% on the IV rank, that may put this thing down at, you know, 18, 19, so we could say it would decline by 6%, and then we could get a better feel for what we thought volatility would do. So minus 6%, that's a more realistic figure. And you can see just 6% in the volatility decline takes you down by $52. So volatility is very, very powerful. And so that's why I tell you, at the very least, you want volatility to stay the same or go up. And so that's, let's see, if we added 20%, well, if we added 6%, you can see that 6% would have made us 57. So it's a double-edged sword, and if it goes higher, it makes you the same amount as if it goes lower. So just be aware of volatility. Be doubly aware of volatility. And outside of that, I think I've covered everything I wanted to talk about. You just need it to happen quick, and that is the bottom line with long calls. So tomorrow I'll try to make another video discussing maybe long puts, and we will go from there into different spread strategies, iron condors, and we'll talk about every one that I trade, and then possibly even some after that, so that number one, I can learn about them, and we can kind of learn together. I can teach you as I'm learning. And so that being said, because once you have the basics, the fundamentals of options down, I mean, these strategies are that you can build any strategy you want. Of course, there are some caveats that you'll learn just as you trade them and as you research and study about them. But we'll save those discussions for another day. At this point, I've talked way longer than I wanted to, so I will end the video. But if you have any questions, certainly don't hesitate to reach me at optionboxer.com. Look forward to hearing from you. Thank you. Bye.